The Gold Reserve Act also authorizes the secretary to sell gold in a way the secretary considers most advantageous to the public interest, providing additional potential funds for building foreign exchange reserves. So he talks about Treasury Secretary being able to sell gold in the most advantageous way for public interest. Again, I know Besant said he was not talking about gold when he said monetizing the assets on the U.S. side of the balance sheet for the good of the American people, but sure reminded me of that. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Wednesday, May 14th. It is about 11:35 a.m. Eastern Time, where we can see the gold futures are down again. Really started around 7:30 this morning and has continued on since then. And as we pull back to our weekly chart, can see here we are back on the 9th, so less than a week ago, up at 33.50, and now here we are today, about $160 lower. Interesting. I flipped over to CNBC, wondering what would be their reason of the day for the gold price being down. And they're saying gold prices fall as trade optimism rises, which who knows, maybe that is the case. Although, forget who this was. Maybe it was Vince or Kranzler, but I do remember hearing someone who used to work on a trading desk talk about how they would gamble with their trading buddies, and when the press would call them for a story to see who could make up the most ridiculous explanation of why the price moved in one direction or another. I'm not saying that's what happened here yet. As trade optimism rises, I'm not sure I share that optimism despite the 90-day truce. And as we will dig into, or maybe not, maybe we will not dig into this today, but have dug into it on our Substack column quite frequently, where there are reasons that I think it's becoming increasingly more difficult to thread this needle. But we will leave that aside today because we have some rather intriguing comments from chairman of the Economic Council of Advisors to President Trump, and that is, of course, Stephen Miran. And I had talked about him. We had discussed, it feels like a conversation, last week, how a fund manager named Michael McNair had written out his thesis of how he felt the Treasury has already been actively involved in the gold market. And as you can see here, executing Miran's gold to FX playbook. So we went through this one last week, although I thought would be handy to go through the actual playbook that he's referencing, which you can see here, and that's a user's guide to restructuring the global trading system. And as you can see down here, this was written by Stephen Miran. In case you're wondering, well, who is he? Is he just some dude? Strategist at Hudson Bay Capital, currently serves as chairman of the Council of Economic Advisors, and previously worked in the Treasury, where he assisted with fiscal policy during the pandemic recession. So certainly interesting things he's seen. And this paper was written in November of 24. And as you can see here, with President Trump winning re-election with a strong Democratic mandate, this was written after Trump was elected. And then a month later, Stephen Miran is Trump's pick to lead Council of Economic Advisors. And this is in December on the 22nd. So basically, Trump wins. Steve writes this. And then Trump says, I think you should be the chairman of the Council of Economic Advisors. And just buckle up because it gets better. Although, real quickly, I did want to share our silver price where we see it down 67 cents. So while these stock markets are up today, and let's see on a percentage basis, so both gold and silver down about 2%. And with that out of the way, let us dig in. And basically, the Miran paper, it's 41 pages, so I'm not going to sit here and read through all of that, but I did go through it again and also pulled out the parts that I thought would be most relevant, especially to people who are investing in gold and silver who have interest in that topic. And by the way, if you do, hit the subscribe button and join us again here. But so let's imagine these are the gold and silver note highlights, or I don't know, things that I think would generally be relevant to any financial market participant. But let us begin. So these are direct quotes in the italics here from Stephen Miran's paper. And here is the first one. The desire to reform the global trading system and put American industry on fair ground vis-a-vis the rest of the world has been a consistent theme for President Trump for decades. Interesting, he says for decades, which makes sense, I guess, if you track it back that far. But anyway, sounds like longer than just in the time when he was president back in 2017. And we may be on the cusp of generational change in the international trade and financial systems. So again, he wrote this after Trump was elected, and then a month later, Trump said, "You're the guy." Then we have the root of economic imbalances lie in persistent dollar overvaluation that prevents the balancing of international trade. And this overvaluation is driven by inelastic demand for reserve assets. So, if I'm interpreting that correctly, not only does he feel that the dollar is overvalued, and not only is it persistently overvalued, but he even says that that overvaluation is the root of the economic imbalance. So, here he mentions with President Trump winning re-election with a strong Democratic mandate, it is reasonable to expect the Trump administration to undertake a substantial overhaul of the international trade and financial systems. This essay surveys some tools available for doing so. So, again, as I had to write out again here, undertake a substantial overhaul of the international trade and financial systems. And he just published the roadmap of how to do that. Continue on here. President Trump has also discussed adopting substantial changes to dollar policy. Sweeping tariffs and a shift away from strong dollar policy can have some of the broadest ramifications of any policies in decades, fundamentally reshaping the global trade and financial system. So won't point it out after each one, but to me, it's that important to remember that Trump wins, he writes this, then Trump picks him as the guy. So it wasn't like this, Trump wasn't sure what he was thinking. This was out there. And he's talking about a shift away from the strong dollar policy to fundamentally reshape global trade and financial systems. Now, in some ways, that's not a surprise. We've seen parts of that already. We also did have the comment from Scott Bessent where he said that they were going to monetize the assets on the U.S. side of the balance sheet, which he says he was not talking about gold. And maybe he is, maybe he isn't yet. Also, he did mention over the next 12 months. And that was probably already 2, maybe 3 months ago. Wild that we got that quote and even threw in a timeline. So thank you, Scott. And then here, as we'll dig into, I mean, I don't know that what we're reading here is then become the plan and now it's being executed. I also don't know that it's not. And certainly when you add in what I've said a couple times about the timeline and then what we've seen occur, it sure matches. So anyway, as we shift away from the strong dollar and fundamentally reshape global trade and financial systems, I'll continue on. There is a path by which these policies can be implemented without material adverse consequences, but it is narrow. I think we've already seen some of the adverse consequences, and I would agree that the path to get through this without even, I think we're past without consequences. With minimized consequences, that path is getting narrow as well. And he says the potential for unwelcome economic and market volatility is substantial, but there are steps the administration can take to minimize it. I agree that the potential volatility, I mean, we've seen there's certainly paths that this could go down where you see things that are more extreme than that. And as I wrote here, it makes you wonder if there's something else they have planned that they're not telling us. And is this document that plan? So then again, we have from a trade perspective, the dollar is persistently overvalued in large part because the dollar asset functions as the world's reserve currency. This overvaluation has weighed heavily on the American manufacturing sector while benefiting financialized sectors of the economy in a manner that has benefit wealthy Americans. I mean, I certainly agree with that. I think I agree with each part of that. And yes, that also points out when I talk about the signs that we're kind of getting into a danger zone where now it's becoming not as much even economically feasible to use US treasuries as a store of value, and that has had its impact on the economy, as we can see by looking at the manufacturing base and hearing what Trump and Stephen Miran have been saying about it. And again, I would just add that another comment he that you could say that was a one of the themes of this paper, where that part about the dollar being overvalued popped up several times. But yet, President Trump has praised the reserve status of the dollar and threatened to punish countries that stop using the dollar for reserve purposes. Yes, and I think that's a nuanced point that gets missed sometimes. I didn't do I didn't even think of it, perhaps back when I first started this channel, but is the dollar likely to be devalued versus gold or other currencies, or are you going to see price of goods go up quite a bit? I would think that still is highly likely to be yes. Although, can the dollar still serve as the reserve currency even at a lower valuation? And there's a lot of signs pointing to that being the likely outcome, and also what Miran and Trump and JD Vance, I might add, have been talking about. And when he talks about threatening countries that want to de-dollarize, I mean, we've seen that. I'm still wondering how that's going to go when countries were already doing a lot of effort and planning to de-dollarize. Then you have what you've just had for the past couple months. Doesn't seem like it would be encouraging a positive change in how that process was going. But anyway, I expect these tensions will be resolved by a suite of policies designed to increase burden sharing among trading and security partners rather than attempting to end the use of the dollar as the global reserve currency. The Trump administration can attempt to find ways to capture back some of the benefits other nations receive from a reserve provision. Reallocation of aggregate demand from other countries to America, an increase in revenue back to the U.S. Treasury, or a combination thereof, can help America bear the increasing cost of providing reserve assets for a growing global economy. The Trump administration is likely to increasingly intertwine trade policy with security policy. Thought that part was interesting, especially as just this morning they announced a new trade deal with Saudi Arabia, 600 billion, which at least I asked my colleague Vince Lancy how much of that is for weapons and destructive products or services. He says all of it. So, viewing the provision of reserve assets and a security umbrella as linked and approaching burden sharing for them together. And then he continues, the deep unhappiness with the prevailing economic order is rooted in persistent overvaluation of the dollar and asymmetric trade conditions. Such overvaluation makes U.S. exports less competitive, imports cheaper, and handicaps American manufacturing. Manufacturing employment declines as factories close. Those local economies subside, and many working families aren't able to support themselves and become addicted to government handouts or opioids. Wonder if that was implying government handouts or government opioids. But anyway, again, you hear him talking about the overvaluation of the dollar. And this part was interesting. America runs large account deficits not because it imports too much, but it imports too much, but because it must export U.S. treasuries to provide reserve assets and facilitate global growth. And yes, and that at the heart of it, these are the reasons why this model is been on the cusp of breaking down, and now I think we're not in the preseason anymore. Finally, if the reserve asset is the lifeblood of the global trade and financial systems, it means that whoever controls the reserve asset and currency can exert some level of control over trade and financial transactions. That allows America to exert its will in foreign and security policy using financial force instead of kinetic force. We already saw that a couple of years ago with sanctions on Russia. America can and does sanction people all over the globe in a variety of ways, from freezing assets to cutting nations off from SWIFT and restricting access to the US banking and financial system that is critical for any foreign bank doing global business. The US exerts its financial might to achieve foreign policy ends of weakening enemies without having to mobilize a single soldier. Economists cannot evaluate whether America's national security goals are worthy, only note that it can achieve them far more cheaply because of America's control of international trade and financial systems by virtue of our reserve currency status. Well, pretty well said. I'm guessing perhaps many of you watching along with me have some questions of whether this reserve currency status should be used as a badge to be policemen of the globe, especially when you look into some of the ways that's been applied in Afghanistan or searching for weapons of mass destruction, which were known not to exist in Iraq. Anyway, we'll stay focused here and also mentions the Gold Reserve Act also authorizes the secretary to sell gold in a way the secretary considers most advantageous to the public interest, providing additional potential funds for building foreign exchange reserves. So he talks about Treasury Secretary being able to sell gold in the most advantageous way for public interest. Again, I know Besant said he was not talking about gold when he said monetizing the assets on the US side of the balance sheet for the good of the American people, but sure reminded me of that when I read this part. And then also that part about potential funds for building foreign exchange reserves. That is exactly what Michael McNair was talking about here when he says evidence of stealthy US FX reserve accumulation using gold. So when he said this, the connection to what we have here and in Michael's tweet chain, which I will not go through today, but we have a video on that last week about how the US government may have been intervening again in the gold market. Now you again know what he's referring to. So few more here before we wrap up. However, the secretary is statutorily required to use the proceeds from such sales for the sole purpose of reducing the national debt. This requirement can be reconciled with the goal of building foreign exchange reserves by having the ESF sell dollars forward. If gold sales are used to deliver dollars into the forward contracts, it will likely satisfy the statutory requirement of reducing national debt. There are other means of structuring the exchange stabilization fund transaction as a form of debt contract to comply with the law. While this is probably statutorily permissible, selling national gold reserves to buy foreign exchange instruments could be politically costly and changes the asset composition of the US government's balance sheet. At a time when Scott Bessent talked very clearly about that balance sheet and the changes that were going to be made over the next 12 months. And here you go. Still, because gold pays no interest, selling it for positive yielding foreign debt should result in income for the US government. Let's take that one again. Still, because gold pays no interest, selling it for positive yielding foreign debt should result in income for the government from the man who, after he wrote this, was picked as the chairman of the Economic Council of Advisors for the Trump administration. Consensus on Wall Street is that there is no unilateral approach that the Trump administration can take for strengthening undervalued currencies. These economists tend to point to the Federal Reserve's policy rate as the main driver of the dollar, and then emphasize that the Fed will not cut rates merely because the president wants to achieve a currency outcome. This conclusion is wrong. There are a variety of steps an administration can take if it is willing to be creative that do not rely on the Fed cutting rates. Goodness. Well, we know how Trump feels about Jerome Powell, and his economic advisor is giving instructions of how he can circumvent the Fed. Then we have, and this one was rather intriguing, International Emergency Powers Act signed by Jimmy Carter that gave the president sweeping powers over international transactions for the good of national security. And if we skip down here, to make reserve accumulation less attractive, one way of doing this is to impose a user fee on foreign official holders of Treasury securities. And that is a big one there at a time when the US is cutting off. Well, it doesn't seem like they're incentivizing China to buy more treasuries. And Japan recently changed the phrasing of their statement to say that now they can't say they won't sell treasuries as leverage in a trade deal. Trump said any country that buys oil from Iran is going to get cut out. And then we have the whole de-dollarization thing at a time when I guess we're not at peak deficits, although they're certainly remaining on the large size. And so we're going to put a user fee on foreign holders. So further disincentivizing a market that has already been pulling back. Makes you wonder who is going to buy all that paper. We could all take a guess. The guy who runs it is called Jerome. But Stephen continues, some bondholders may accuse the U.S. of defaulting on its debt. Not good that we're having that as the first part of this sentence. But the reality is that most governments tax income, and the U.S. already taxes domestic holders on their interest payments. So while this policy works through currencies as a means of affecting economic conditions, it is actually a policy targeting reserve accumulation and not a formal currency policy. So there you have it in the description field. Here's the whole 41-page paper, which, I mean, if you really like digging into these things, it's worth your time. I think if you just wanted to get a flavor for what's in there, I think we accomplished that pretty decently today. So again, where does that leave us? Do I know conclusively that what Stephen Miran is saying is being implemented in the way that Michael McNair is suggesting? Of course not. Even Michael McNair was not going that far. But on the other hand, is it possible that, the things he said in there matches what Trump has said and matches what Scott Bessent has said? So is it also possible that we are on the verge of a big change in the global financial trading system, and that to some degree, maybe a large degree, that this is the roadmap of how they're going to get there? Well, leave your thoughts on that one in the comments field below. Just again, in that same sense with Scott Bessent saying over the next 12 months that you would get a timeline, and then that conceivably you could have access to the roadmap. So I thought this one was pretty intriguing. Go ahead and share that if you enjoyed it, and think other people would at least want to be aware of some of the comments in here. And then in case any of this freaks you out and you are thinking, oh my God, they're really pulling the plug on this, what should I do to best be ready for such a global, once in a lifetime event? Well, obviously, you want to be going into that with your silver chopper Ben Bernanke 26-ounce 3/9 fine silver figurine. Because at least if we're reaching the end of the current monetary system to the point where Trump's chairman of economic advisors is writing papers about the overvalued dollar and the need to change this model before our manufacturing base no longer exists, well, you can always get. Here is the silver chopper Ben Bernanke.
That is so cool.
Can you even see his tie flying in the wind while he throws out $100 bills? Look at him getting ready to throw that money out there.
I see that.
Because that's what it looks like when
That
Ben
even looks
Bernanke,
like his sorry ass.
Look at the size of the bald silvery head.
Yeah.
It's enormous. Back propellers spin too.
How many ounces is that?
That's 26 ounces of 3/9 fine silver, homie. As you can see here, some of the key features with your silver chopper Ben figurine, you can really get the control panel. Look, there's a whole dashboard for Ben to fly. He wants to fly onto your desk and throw
Here, Ben.
Look at the precision.
I see that.
Crazy old bastard.
He's got 2 sets of spinnable propellers
This
still.
thing is great.
Dude, you could fly that thing.
Wow. I could.
Look how happy he is. I think he's actually going to get out there and throw the $100 bills. Jerome, no!
There'll be $1,000 bills by then.
I got this.
I like it.
Get the history before it's made. Just click the link below to get your silver chopper Ben now. So to find out more, click in the link below to get your very own silver chopper Ben 26-ounce 3/9 fine silver figurine, and bring his big silvery bald head right into your kitchen for enjoyment for children of all ages as well. So with that said, going to wrap up for now. Hope you enjoyed this one. Hit the share button and we will see you again soon.